here with Jim Simpson. He manages the investment banking group with Finance 500 Inc. Jim, welcome.
Well, thank you for having me.
Absolutely. If you can give us a brief overview of you and your firm.
Oh, absolutely. Yeah, Finance 500 is based out of Irvine, California. We have, at this point, we have about 25 investment bankers that are part of the group. We are focused on the lower middle market space. We define that as companies that have anywhere from $500,000 to about $7 million in trailing 12 months adjusted EBITDA. The group is comprised of specialists in a number of different industries, and we're built on the notion of collaboration. Most of our bankers work and team up on each transaction that they work on and bring both the relationship management as well as the industry specialization. And the goal of the group, the mandate from the firm, which the firm's been around since 1982. There are 8 offices, 110 people in the firm. And the mandate, my mandate as the head of investment banking is to grow it to a full national practice, and probably somewhere in the 75 investment banker range, and have coverage across the United States and have full industry coverage, deep vertical expertise, both within industries as well as product.
Great. And can you tell us about the specific industries that you work with? Right
now, I would say we have a number of different specialists. We have everything from water and environmental services to we have a semiconductor, we have consumer products, of course manufacturing, community banks, we have aerospace, we have airlines, we have med tech, biotech, and when I say this, we have specialists in every single one. Insurance, we have specialists in every single one, and the key with us is that we are really built by operators. So most of the investment bankers have not been necessarily investment bankers their entire career. A lot of them have deep operating experience. I'll give you an example. Our water specialist had 25 years of operating experience in the water industry as a chemical engineer, had P&L responsibility of a $100 million international segment of U.S. Filter. Most recently ran the business development group at Pentair, which is a multi-billion-dollar water company. So that gives you an example of the type of deep industry expertise that we bring and are trying to continue to grow in the group. We also have a 506C group that is coming on. It will be part of our broker-dealer, and we're very excited about that as well, so we can start to access this new form of capital formation that is coming to the market.
That's great. Yeah. And I'd like to talk to you today about a recently closed transaction. If you can give us a brief overview of the deal you've worked on.
Well, I can't disclose names, and I will give you a transaction that I'm familiar with because I'll know the participants much more. It was a water company, a wastewater treatment company, and based out of California, a multi-site wastewater treatment company, probably in the $3.5 million trailing 12 months, and probably very, very profitable companies, probably 12, 13 top line. The company, what we achieved here is the owner wanted to take a few dollars off the table, take care of their family, make sure that they didn't have all their eggs in one basket, but then also grow the company over the next 5 years to exit at a much higher valuation than they are and were at that particular time. So we were able to identify a perfect institutional investor that came in, had deep industry experience, had their client base had a very strong component of oil and gas. So this particular investor brought, as a petroleum engineer, and understood exactly the business model, had a great deal of appreciation of it. So at a cultural level, it was a perfect fit for what they wanted to do. Our client was able to take off a sizable amount of money and protect the family, completely outside of the business. And now they are going forward, and the company's doing extraordinarily well. So all parties are very happy with what's going on there. That was, in that case, is a majority recapitalization. And so the company came away with growth capital, so it was a true recap, but most of the proceeds went out, and the company continued to have good liquidity on the backside of the transaction.
And can you tell us about some of the other parties that were involved in the transaction and what their roles were?
Well, in a normal transaction of this type, where you're going to have the parties that of course represent the issuer, and then you're going to have parties that represent the investing parties. On our side, of course, we had the accounting group, and we would have even their senior bankers. When I say senior, I mean their banking, traditional bank folks that were in the company prior to us. That was kind of the core team on the issuer side. On the investor side, this group brought in a third-party transaction services group to do a quality of earnings analysis. They brought in a separate insurance kind of risk management group to evaluate their entire risk management, policies and this company had some environmental services types of issues, so there were some unique aspects to that. They brought in an environmental services group to assess the quality of certain controls and procedures and the quality of the assets that they were running, because this is a heavy asset business. So there were a number of different parties that we had to orchestrate and kind of quarterback through the entire thing. That kind of gives a sense of it. Right?
Sure. And how do you choose the people that you bring in to work on a transaction?
Foundationally, there are two elements: competency, but probably more than competence, not more, but of equal importance, trust. So you have to have a great deal of trust in how the parties will handle themselves within the transaction, how they will complete their job and without creating collateral challenges. And so you really need to understand the person and the people that are able to do that. And there are some great transaction services groups that really understand that not only do they have to do the quantitative type work, but they also have, and assess the qualitative, but they have to do it in a way that is additive from a cultural standpoint and consistent with the private equity group that is contemplating coming into the transaction. So you quickly know who are the good people and some of the people who can kind of get in the way of these types of delicate discussions and delicate examinations of the business.
And what was the most challenging aspect of this deal for you?
Well, the interesting thing about the deal, it really wasn't the investor or the owner. There were some challenging issues around indemnification having to do with some property and some environmental concerns around the company. It's a wastewater treatment plant, so you have obvious concerns there. But what turned out to be one of the bigger challenges, we had to get creative on it, was that because it was a majority recap, that the owner who had, or the senior line that was already in the company, had a personal guarantee with the owner. That's very normal and customary for small companies. But now that it contemplated that the investors were going to own a significant portion of this company, it no longer made sense or is appropriate to have a personal guarantee with the senior lender. And the owner shouldn't take that type of risk because for obvious reasons. So having to deal with that and having to ultimately replace the senior line became an additional wrinkle in the transaction that actually was more challenging than we expected. And we ultimately resolved it, but it added another level of complexity that we did not anticipate out of the gate. So,
and are there any interesting takeaways or any lessons learned from this deal?
as an investment banker, what I learned from this deal was, and again, this is kind of commonsensical, but I learned from this deal was much better to have a more negotiated LOI right out of the gate. It deals with every aspect of the SPA and doesn't leave as much for discussion later on. Allows you to avoid as much as possible retrading on the transaction, even though QE is going to probably result in some challenges on that front, or it can. But you're not going to have it. You're not going to have legal issues that are going to challenge you on that front. So we went from kind of your normal and customary LOI out to a 17-page LOI, and we really dealt with the issues right up front and center, and we didn't want to have any uncertainties, or we wanted to mitigate those uncertainties as we got closer to the transaction.
Great.
So now that's a practice that I try to do with everything.
That's wonderful.
Yeah.
Jim, thank you so much for taking the time to sit down and talk with us today.
Well, thank you. Thank you for having me.
Absolutely. Absolutely.
Yeah.